She's joining us to tell us what is picking up in terms of dealing room action. Nimesh, we're at the low point of the day. It's expiry day, so part of it could be attributed to that. But how the flow is looking?
Absolutely, Nigel, because of the expiry as well, we are seeing this kind of pressure in the market. But again, there are some technical factors as well. I understand a lot of clients have not been allowed to roll over their positions, or for that matter, even the cash market, they've been asked to square off. So maybe that also explains that the broader markets are also under pressure today. I guess, all eyes will be on the election outcome. That's going to be a big trigger for the markets to watch out early next week. So that's something to track. But I guess two things to watch out for. One, after today's fall, the PCR has technically fallen to 0.6 to 0.63, technically around 0.6. Market tends to bounce back, so watch out for that particular thing. And also tomorrow, because of the MSCI rebalancing, there's going to be an inflow of close to $2.5 billion. So both things to monitor as to what happens, starting tomorrow in the fresh series. So that is something to track. In terms of today's numbers, the institutional data again will look a bit skewed because of the three large block deals worth 3,700 crores. Remember, the same thing happened last yesterday as well. So for the last couple of days, nearly $1 billion is what a lot of Ps and promoters have sold in the open markets. Even that's sucking to a bit of liquidity in the market as well. I guess from a sector point of view, the big sector outperformance has come in the bank names today, largely on back of that S&P upgrade on few select names. But broadly, don't account for too much into today's FIDI data because of the MSCI rebalancing, because of the expiry as well as the blocks. But PCR at 0.62 is an important trigger to watch out for.
All right, Nimesh, thanks for that feedback. In terms of specific stocks, what's on your list?
Well, the first stock is IRB Infra, a big cut in that stock, down 10%. It was part of my charter list a few days back that expect a large block deal. Got executed today. Promoters sold close to 4.5% stake. But interestingly, I understand one of the domestic mutual fund was an anchor investor in today's block. The stock is under pressure because I understand there is a bit of slippage element as well. But in terms of buyers, almost 60-70% of the book was from long only. That's the overall feedback. The second name is Cipla. Been under pressure today, but largely I understand a leading long only fund has become active buyer and has been accumulating as well at these levels. Pharma in general has seen some bit of buying interest back, but particularly to Cipla, a very long only fund is an active buyer there. The third name is Tech Mahindra. The entire IT is under pressure today, but Tech Mahindra stands out purely on back of self-flow. So some bit of profit booking or whatever, but there is selling pressure. So expect high delivery volumes in Tech Mahindra today. And the last one is ZF Commercial Vehicle. Again, very thin stock. Promoter, the parent owns 75%. Domestic mutual funds close to 10-12%. So not much of a float, but the indication is there could be a large block in ZF Commercial very soon. Again, there has been a trend of parents selling stake in India for buybacks in the global market. So maybe on similar lines, you could expect a large block in ZF Commercial very soon.
Okay, thank you very much for that. Let's also invite Ambrish Baliga.